Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 15th September 2023. The CBDT has amended the notification number 16/2020 dated 5th March 2020 to enhance the scope of Section 47, Subsection 7AB exemption. Section 47, Subsection 7AB of the Income Tax Act 1961 provides for an exemption from capital gains tax on transfer of capital assets by a non-resident on a recognized stock exchange located in any international financial services center. The amendment has included the following units under the scope of exemption. Number 1. Units of investment trust launched under IFSC. Number 2. Units of exchange traded fund launched under IFSC. And number 3. Units of scheme framed under IFSC authority regulation. The exemption is available only if the following conditions are met. Number 1. The transfer is made on a recognized stock exchange located in any IFSC. Number 2. The consideration for transfer is paid or payable in foreign currency. And number 3. The capital asset is one of the assets specified in Section 47, Subsection 7AB. State-run Oil India is exploring legal as well as diplomatic channels to repatriate its dividends worth $150 million from Russia. Oil India, Indian Oil Corporation, BPCL and ONGC have participating interests in multiple oil and gas projects in Russia from which they earn dividends periodically. Companies have been receiving dividends but have been unable to transfer them out of Russia since February 2022 due to banking restrictions in the wake of the Ukraine war and the Western sanctions on Moscow. Oil India is planning to invest 25,000 crore to reach its net zero goal by 2040. Of this, 8,000 crore would go into setting up second generation ethanol plants. The company is targeting to significantly cut its gas flaring to reduce its carbon footprint. It plans to lay a new pipeline and set up compressors in isolated fields to transfer currently unused gas to customers. India's political consulting industry is hotting up as the world's largest democracy prepares itself for the biggest democratic exercise on the planet, which is the Lok Sabha polls. In the run-up to the 2024 general elections, which will be preceded by a round of balloting this winter for the Hindi heartland states of Rajasthan, Madhya Pradesh and Chhattisgarh and Telangana, there has been a surge in demand for young graduates across a raft of independent political consultants and party-affiliated agencies. Freshers are being hired from institutes across the reputational gradient, from regional professional colleges to the top-tech IITs and IIMs. There is an estimate demand for more than 20,000 people who could potentially find employment in policy-related consulting in the months ahead. India's drug regulator, the Drug Control General of India or DCGI, plans to review pharmaceutical manufacturing standards in order to ensure the quality, safety and efficacy of drugs. The DCGI will meet the pharma industry associations to discuss reviewing good manufacturing practices for pharma companies. The government aims to upgrade Schedule M, which lays down good manufacturing practices to international standards. Reserve Bank of India on Thursday said 15 large non-banking financial corporations, including LIC Housing Finance, Bajaj Finance, Shriram Finance and Tata Sons, will be subject to enhanced regulatory requirements in financial year 24. The central bank has categorized NBFCs into base layer, middle layer, upper layer and top layer. A list of 15 large non-banking finance companies falling in the upper layer category has been released. Besides LIC Housing Finance, Bajaj Finance, Shriram Finance and Tata Sons, others in the list include L&T Finance, Piramal Capital and Housing Finance, Cholamandalam Investment and Finance Company. Indiabulls Housing Finance, Mahindra and Mahindra Financial Services, Tata Capital Financial Services, PNB Housing Finance, HDB Financial Services, Aditya Birla Finance, Muthoot Finance and Bajaj Housing Finance are also part of the list. According to RBI, despite qualifying for identification as NBFC upper layer as per scoring methodology, TMF Business Services Limited, formerly Tata Motors Finance Limited, is not being included in the list of NBFC upper layer in the current review due to its ongoing business reorganization. There is a prescribed methodology to identify the NBFCs in the upper layer as per their asset size and scoring methodology. In terms of the scale-based regulation, a revised regulatory framework for NBFCs which was issued in October 2021, once an NBFC is classified as NBFC upper layer, it will be subject to enhanced regulatory requirement. This will be for at least for a period of 5 years from its classification in the layer, even in case it does not meet the parametric criteria in the subsequent years.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.